So you've made an offer to purchase a home. Well, what comes next? Welcome to part 3 of our 3-part series on the home buying process, where we take you from negotiating an offer all the way through closing on your home. Hi everyone, I'm Lorelei with Halcyon Home Group, part of Keller Williams Realty Consultants here in Roswell, Georgia. If you're new to our channel, please consider subscribing. We publish new content on Tuesdays regarding real estate and all things real estate related in the North Atlanta metro market. So today we're picking up with where we left off in part 2, which is that we had just submitted an offer to the seller. Now, if you missed part 1 or part 2 of the home buying process, feel free to check those out as well. So once we submit your offer to the seller, typically one of two things is going to happen. Sometimes, although infrequently, the seller will accept your offer as is. More oftentimes, we see that the seller will counter your offer, and that could be price, it could be on terms, or it could be a combination of the two. Now, don't be alarmed if the seller counters you, because you will have an opportunity then to either accept their counteroffer to you or to put together your own counteroffer back to the seller. It's important to go into it understanding that the counteroffer process can take several hours and sometimes even several days, depending on whether you're in a buyer's market or a seller's market, and also based on the price point and the particular home. A best practice that our team uses that we also strongly recommend you follow is to have all counter offers, whether you are sending it or receiving it, in writing. Because while verbal offers do have to be presented to the other party, in Georgia, they are unenforceable. Once both parties reach agreement on all of the contract terms, then both parties are going to sign the contract, and here in Georgia, we bind our contracts. And that is an important day because that is the date that is time-stamped on the contract, and that is the date that all of the timelines and deadlines are based off of. For instance, your due diligence period, your finance contingency, and your appraisal contingency. Once you have a binding agreement, there are a couple of things that you'll want to get started on right away. The first is to get your general inspection scheduled, and that's because it can take a couple of days to get that on the calendar, and then it'll take about 24, sometimes 48 hours to get your general inspection back and review it. And based on your general inspection, you might also want to get some other specialty inspections completed as well. And remember, the time is ticking from binding agreement date to the end of your due diligence, which is the time period for you to negotiate any repairs. So the other thing we'll want to do right away is get a copy of your contract over to your lender, and that's so they can start underwriting your file. And don't worry, during this time, it's going to feel pretty invasive with the lender, and that's normal. Everybody goes through it. During this time, they're going to ask you to provide a lot of documents and answer a lot of questions. For example, they're going to ask you for copies of your tax returns, copy of your pay stubs. They're also going to source your earnest money, and they're going to do a verification of your employment. One of the first major deadlines in your contract is the due diligence period. And remember, it's during the due diligence period that you have the opportunity to request repairs, if any, with the seller. So you'll have gotten your general inspection report back, and based on that report, you might also have ordered some specialty inspections. And once those are complete and you have all of your reports on the home, you're going to put together what's called an amendment to address concerns. And that is a formal request to the seller for the items that you would like them to repair or replace. Now, several things can happen with your repair request. The seller can choose to do all of the repairs or none of the repairs, or somewhere in between, which is what we see more often than not. And sometimes the seller will actually complete those repairs, and other times the seller will give you money in lieu of those repairs, allowing you to do those repairs yourself, and sometimes we see a combination of the two. It's important to understand that if the seller agrees to give you money in lieu of repairs, they can't just write you a check at closing. They can either contribute towards your closing costs, or they can do a reduction in the sales price, or they can also have a check made payable to a particular vendor at closing, or it could be a combination of any of those three options. The next deadline in your contract is the appraisal contingency. The appraisal is ordered by the lender, and it's really put in place as a safety mechanism for them to ensure that the home is worth the contract price. So when the appraisal comes back, the lender will let you know whether the home appraised or if it didn't. If it does appraise, then that means the appraisal came back at or above the contract price. And that's great news for everyone, and the contract keeps moving forward. Now, if it doesn't appraise, there are several different scenarios that could happen. The most common that we see is for the buyer to approach the seller and ask for a reduction to the sales price. So sometimes the sellers will agree to the full amount and reduce the contract price to the appraised value. Sometimes, though, we see that the seller won't do the full reduction, and that becomes another negotiation on a price between the appraised value and the contract price that both parties can agree on. So if the seller comes down some, you might come up some, and what that means when you're getting a loan is that you have to bring that difference between the appraised value and the final contract price as cash to closing to cover the difference. Now, if you and the seller can't come to agreement on a new price, it does give you the opportunity as a buyer, because of your appraisal contingency, to walk away from the contract and have your earnest money refunded to you. The next hurdle is to receive what's called your conditional loan approval from your lender prior to the end of your finance contingency. So during this time, you've been gathering all these documents for your lender and answering all their questions. You've gotten the appraisal in, and they've looked at all of that data to make a determination on whether they're willing to lend the money to you or not. So when you receive conditional loan approval, that means that the lender has issued a statement that they are willing to lend you a specific loan amount based on you meeting certain conditions prior to closing. It's important to understand that this is not a guarantee from the lender that they are going to fund your loan. It's truly conditioned upon your financial picture not changing between now and the closing date. So for example, you can't lose your job or quit your job, and now is definitely not the time to go out and buy a new car or buy new furniture for that beautiful new home. One of the conditions of your lender will be for you to provide a homeowner's insurance policy prior to closing. So now is a great time for you to start shopping insurance companies and comparing rates. Now is the time that you'll also want to get quotes from various movers and lock in your move date. And lastly, don't forget about your utilities. You'll want to start getting them set up and transferred, and our team will support you in that by giving you a list of local providers. The next step in the process is receiving what's called clear to close from your lender. And what this means is that the underwriter has reviewed all of the documents and issued you final approval. It's at this point that the lender will issue what's called a CD, or closing disclosure, for your review. The closing disclosure is issued at least 3 days prior to closing, and it's a final accounting of the loan's interest rate and fees, the mortgage's closing costs, your monthly payment, and the grand total of all payments and finance charges. If all of the information on the closing disclosure looks correct, then as a buyer, you'll sign off on this document. The next step will be for the closing attorney to issue what's called a preliminary ALTA statement. Now, this statement is an itemized list of all the fees and the charges that the buyer and seller will pay toward closing this transaction. The ALTA reflects the sales price, the borrower's loan amount, the earnest money deposit already made by the buyer. It also shows any seller credits and prorated taxes and HOA dues. And lastly, it also shows the amount that you as a buyer are responsible for wiring prior to close. One of the last steps to complete is called your final walkthrough, and this is an opportunity for you to revisit the home. We want to do this because if repairs have been completed, we want to make sure that they were done appropriately, and it's an opportunity for you to re-inspect the home and make sure that it was left in the condition that it was in when you went under contract. So now we're in the final stretch. It's the day of closing. Now, most closings take just about an hour. You'll also want to be sure to arrive about 10 to 15 minutes early and bring at least 2 forms of ID. And those forms of ID can include driver's license, passport, or credit cards. At closing, both parties will be signing documents. However, as the buyer who's obtaining a loan, you'll by far be signing the most amount of documents. And once you and the seller have both signed the documents, they'll be submitted to the lender. Once the lender has reviewed those final documents, they will fund the loan. Now, on occasion, the loan doesn't fund right away, but that's okay. We usually see it within at least a few hours. And it's once the loan has actually funded that you've closed on your property. And congratulations, you've now closed, and we're all going to celebrate. Thank you for joining us for part 3 of our 3-part series. If you like what you saw today, please give me a thumbs up. And if you missed parts 1 or 2, or you'd like to see any of our other videos, please subscribe. We look forward to seeing you next time for all things real estate and real estate related in the North Atlanta market.